right, good morning. Good morning, you magnificent melonhead. Big story I woke up to this morning. What has happened in Japan? We have got a Japanese pivot. That's what I'm calling it, at least. Maybe some guy's going to come in the comments and be like, oh, Japanese pivot, your language is all wrong. It's misleading and FUD, all that stuff. But I'm calling it the Japanese pivot. But it is not the pivot you would think, at least not in the context of how our guys pivot or the big pivot that everybody has been expecting from the Federal Reserve. And my God, I'm already sick of the word pivot. I'm just realizing this. I am so sick of pivot talk. But get ready because there's a lot more coming. Because Japan just pivoted hawkish. The most dovish central bank in the entire world last night, very surprisingly, raised their target interest rate from 1/4% to 1/2%. Lottie freaking da, 1/4 point. Oh my God. Well, yeah, it's quantitatively, nothing burger doesn't even begin to cover it. But symbolically, psychologically, this is major. All right, because the most dovish central bank in the world has just made a hawkish pivot. Just a little bit of context. The Bank of Japan has been engaged in yield curve control, which is the most Keynesian modern monetary printer go burr policy imaginable. That is not when they say we're going to hold interest rates low or we are going to, it's not like quantitative easing, what our central banks did during the pandemic, where they say we're going to print 90 billion a month and dump it into the system. No, the Central Bank of Japan was saying we are going to hold our interest rates at 1/4% on the 10-year Japanese government yield, and we'll print as much yen as we need to maintain that. We don't care if we got to print 100 billion, a trillion a month, whatever we got to do to maintain that yield. Well, last night it started with an unscheduled bond buying operation where that peg, if you will, to 1/4% broke, and the Japanese realized they were going to have to come in and start buying up more bonds. And they initially they announced an unscheduled bond buying operation, i.e. printing money and buying Japanese government bonds. And then shortly afterward, they didn't abandon it, but they loosened their policy. Well, that's not even right. I got to be so careful with my language here. Technically, they tightened their policy. They raised their ceiling interest rate from next to nothing to almost next to nothing, from 1/4 point to 1/2 point. Again, I just want to keep this all in context because I think the initial reaction from the market probably a little bit more than it should have been. All right, I think the market probably ran with this a bit much, but this is a very symbolic gesture, and this, a lot of people are going to look at this and draw a lot of conclusions. They're not going to look at the quantities involved. They're not going to look at the numbers involved. They're just going to say, "Oh my God, the most dovish central bank in the world is more hawkish." And, oh my God, higher for longer, and the central banks are going to tighten us all into a recession, and now Japan is jumping on the bandwagon too. All right, I'm a little more, to use Fed language, I'm a little more sanguine on the topic. But we're going to get into that a little more because Japan has been having a big impact on the States. Their government has been dumping our debt in order to raise dollars, in order to prop up the yen. So it's going to affect that. This is going to affect the strength of the dollar. We saw that last night. This is going to affect interest rates here in the U.S. And because it's going to affect interest rates here in the U.S., it's going to affect the U.S. debt market. It's going to affect U.S. stocks. It's affecting commodities already. Silver this morning, my God, I love it. The last I looked, 80 cents. Silver was up this morning. That's a big move for silver. So this thing is going to make a lot of noise today. This is going to be the biggest story in the world today. Again, the world is still digesting it. I'm still digesting it. Mish is still digesting it. We're all digesting here. This is going to give us indigestion. And speaking of Mish, the mystic, let's bring my man Mish in here. How are we doing today, Mish?
All right, there I am. Sorry. I was having issues. I've been having issues a lot this morning. I'm doing pretty good.
You're coming through loud and clear over here.
It is.
Yeah, it is cold.
So yeah, hey, you want to talk about that storm coming through real quick?
Yeah, let's touch on that one real quick. Go ahead. You've been doing that.
Okay, yeah. So several different YouTube guys out there, and there's some really good ones. Don't get me wrong. I use Rick Hall, and what they're saying is this big Arctic cold front coming down. It's so big and hard that it's actually going to warp the GDP a little because of the crop die-offs, the people not going to work. This is a big enough storm that could paralyze the nation for, I don't know, a couple, 3, 4 days. Luckily, it is over Christmas, but we're going to see single digits in Florida. There's no amount of hay burning in the orchard fields that's going to save those trees.
You know, we were talking about this before we started the stream, and I have echoes of Trading Places, Mortimer and Randolph, and the $1 bet. Looking good, Billy Ray. Somebody finished that. Somebody let me know in the comments. What follows looking good, Billy Ray? Come on. But yeah, a deep freeze like this, you get this big chunk of Arctic air, breaks off. You know, you'll hear the phrase like polar vortex, or my buddy JC over at Weather NJ, he likes to say bombogenesis. That's his favorite word. We're getting all those meteorological phenomenons thrown around just in time for Christmas. I hate the cold with a passion. All right. If there's one thing I can't stand, it's communism. But if there's two things I can't stand, it's communism and cold. And they go hand in hand. Communist countries tend to be very cold. The exception of Cuba, I guess. But yeah, this is not going to be nice. This is not going to be pretty. Keep in mind, we've got an energy crisis going on globally. We're struggling with higher energy prices. This is going to hit those utility bills here in the States. And I'm starting to see a lot of winter talk over in Europe. Also, they're starting to burn down those gas reserves. Now, they're still in a pretty good place over in Europe as far as the stock that goes on. By the way, hi, Mom. Hi, Dad. I love you guys. They're still okay over in Europe. The levels have not fallen and dropped to nothing yet. They're still actually above their 5-year average. But they had an unseasonably warm fall, and that shift to cold is finally starting. So we'll see what happens.
So, yeah, they are above their 5-year average, because I think you're probably looking at the same chart I'm looking at. But the slope of change is dramatically harder right now because of what's going on with this. Yeah. They're getting their own polar vortex.
Yep, and keep in mind, with no flow in the pipelines, they're going to burn through that inventory a lot faster than they have in previous years. So when that cold finally does arrive, that chart's going to head south real fast. I got a couple of supers here I got to get to. Hello, Mr. Mike Bender from Robin RC Models. Thank you, sir, for the super chat. He says, sector rotation happening, financials bullish. Mike, yes, sector rotation is happening. Financial bullish, not with my worst enemy's money at this point. All right, not with a massive unwinding underway in the debt market. It's starting in crypto. You know, my theory here is that crypto, I'm talking about the garbage crypto, not Bitcoin, right? The Sam Bankman fraud, all those guys, Binance, all these DeFi platforms unwinding. In my view, that is the most garbage trash heap sector of the debt market failing first. And I think that is going to continue down Exter's pyramid as conditions get worse. We saw that story yesterday about the Fed window finally getting tapped. That's something that only happens during periods of emergency liquidity, or it's a sign of stress in the financial system. I don't want to be holding any financial stocks going into that. This is me here. If I was investing my money, what I would do. Even though, yes, you're right, a rotation from growth into value would historically be good for financials. However, in this scenario right now, I would not touch financials with a 10-foot pole. A lot of them, I suspect, are going to go to near zero in the next few months to a year. I just wouldn't want to be caught holding financials right now. But yes, the sector rotation is happening. You can see that with the change in performance, but relative performance, I should add, between the Dow and the NASDAQ, where, the Dow is having bigger runs upward during these bear market rallies and then smaller crashes during these big sell-offs. Meanwhile, the NASDAQ barely budging to the upside during the bear market rallies and then free fall during the sell-offs. So, yes, that sector rotation from growth to value, that's been going on for a year now. I suspect that will continue for a while. Be careful in those financials, brother. That's all I'm going to tell you. Be real careful there. That is a minefield, especially with all these banks tightening. Be careful. And Mr. Gordon Nash, thank you, sir, says, whatever happened to the diesel shortage? I think the diesel shortage was probably helped by the fact that there is just very little retail going on right now, even though we're in the Christmas shopping season. Initial reports are that the American consumer is spending significantly less than in years past or than forecast. And so that means there's a lot less trucks on the road. So I think the diesel shortage is not the emergency that it was a few months ago because our consumption rate has fallen. Now, I want to add the caveat to that the diesel shortage, there was some, how do I phrase this delicately? There was some word choices with the descriptions of the diesel shortage. You know, when they said we had 20 days of diesel or 25 days of diesel, right? That was if all diesel production were to have stopped, then we would have run out of diesel in 25 days. We had a 25-day inventory of diesel. There was diesel being put in, there was diesel being pulled out. So there was some misleading language that went into the description of that crisis. I don't think we are out of the woods yet because we are still historically low on the inventory, and we do still have a refinery bottleneck, and we're still exporting a lot of diesel because Europe is burning through more diesel than they normally would right now because of fuel switching going on. They're trying to save natural gas, so they're importing a lot of diesel. So a lot of the ingredients into the diesel shortage are still there, and I would add that also includes home heating oil, which is going to be a big deal here in the Northeast U.S. All right, you'll see that described as distillates in a lot of these fuel reports. So we're not out of the woods there, but I think the slow Christmas shopping season may have contributed to the diesel shortage falling out of the headlines. That's my initial take on that. Thank you very much, Gordon Nash, for the very thoughtful question and for the support of the channel. As always, you are a gentleman and a scholar. All right, let's get to the indexes a little bit here, and then we will talk more about this Japanese story. All right, right now the S&P is basically flat, currently down 11 points, scheduled to open down about 1/3%. You can see big sell-off in the futures when Japan made that announcement last night about the unexpected, we'll call it a rate hike. I guess that's what it was. It wasn't really a rate hike. They're just allowing rates to rise as they naturally want to. Initially a big sell-off, and then someone came in, bought up the dip this morning. Now we're down about halfway between, about half of the sell-off. So stocks basically flat right now. Let's see what the Dow is doing. Same thing in the Dow, doing a little bit better than the S&P this morning, down about 21 points or 0.7%. And the NASDAQ underperforming the rest of them, down 0.5% or 63 points. Again, all the same thing. This big sell-off on the initial announcement from Japan. Somebody bought the dip right around 4 o'clock in the morning, and now we're ticking down a little bit. In the DXY, that's the U.S. dollar index, or the strength of the dollar measured against other global currencies, which includes the yen. The yen is a big input to the Dixie. You can see here again, look at this, 10 o'clock last night, 2200 Eastern time, big drop down in the DXY. All right. Let me talk about the drop in the Dixie. All right. That was the strengthening of the yen on the rate hike. And this is where I think the market maybe not has this one wrong, but the market might be overreacting a little bit. Because the strengthening of the yen, this is the market front running or people believing, hey, all these Japanese investors who have been hiding in dollars, right? If you're a Japanese investor, you got no business holding a Japanese government bond that's yielding 1/4%. Not when you can trade your yen for dollars and park them in U.S. treasuries, which were yielding anywhere from 3 to 4.5% over the course of this year. All right. So with this surprise raise in interest rates last night from the Bank of Japan, it looks like it started this belief that all that Japanese money is going to come back to Japan and everybody's going to dump their dollars and buy Japanese government bonds again. I don't really buy that. Okay. My initial thoughts here is this is too much. And think about it. If it was your money, what would you do with your money? Are you going to dump your USTs that are yielding? Well, I don't own any USTs, so I guess this doesn't really apply to me. But if I'm putting myself in their position, are you going to dump your U.S. Treasury currently yielding, about 3.3% or, I don't know, 3.7, something like that? Are you going to dump that for a Japanese 10-year that's now yielding 0.5%? No, I wouldn't. So, again, I think the market is overreacting a little bit here. I do think this is significant. This is symbolic. But I really don't think this is the huge story that a lot of people are making it out to be this morning. At least not quantitatively. Qualitatively, this is huge. All right, the most dovish central bank in the world just went hawkish at a time when the most hawkish central banks are starting to turn dovish a little bit. So you see this big gap between the central banks. It's starting to shrink a little bit as their policy narrows. But again, the numbers here, the numbers involved just don't really impress me. That's all. It's a quarter of a point hike. I mean, a week ago, the Fed hiked by 50. And then Canada and England and Europe, they all did the same thing. They all hiked by 50. So if you take a snapshot of where we are now and a snapshot of where we were a week ago, the gap between the target rates has actually grown by a quarter of a point. So I don't think this is like the death knell of the DXY. Now, this is going to put downward pressure on the DXY, and the DXY did just have a major technical breakdown a few weeks ago. So this could push the dollar index lower. That would be significant. The dollar index, that's a denominator in the value equation, so that's going to put upward pressure on asset prices. That's something to think about. Doesn't mean stocks are going to the moon, but it does mean commodities. Look at commodities this morning. Gold up $17 or 1%. Silver, whoo, 24.75. We got that 24 handle back in silver. Up 87 cents right now, 3.75%. Monster move in silver this morning. Absolutely beautiful. Copper's up, platinum's up. Crude oil's even got up a couple of dimes there, and crude finally catching a bid at 75. So you're seeing a lot of green in the commodity space today, not across the board, but a decent amount of green here in the commodity space. So right now, market's still digesting
we've talked
this.
We've talked before how silver is almost a leveraged move at this point from the Dixie.
It is, and
levered.
Hey, look at that. Levered move in the Dixie. Yes. Now this is interesting. Look at the move in silver. It started about 3:30 a.m. Right, big move up from 3:30 to about 4 a.m. this morning. This is Eastern time. Not a huge reaction around 2200 last night when the Japanese made the announcement. Here's where the Japanese made the announcement, and then here's the big move in silver. Now, if we go back to some of the indexes in the futures here was the big move in the Japanese, the announcement, and then here's that move around 3:30, 4 o'clock. So something happened between 3:30 and 4 a.m. last night. I'm not sure what it was. Was that when the Japanese actually made the announcement? I thought the announcement was at 2200. But
well,
that's
I think
interesting.
that is a little profit taking there, right?
Could be. But this big jump in the stock futures, this coincides. All the indexes showed it. Right there it is again, 3:30 to 4. 3:30 to 4, big jump in the indexes, and that coincides
could that be people,
with this monster
could that
move in
be
silver.
people buying dollars from Japan, right? And then
That could be
investing
people,
it because
people dumping dollars, sending asset prices higher, denominated in dollars.
Okay.
Right? If people are dumping dollars to buy silver, that would send the silver higher, that would send the dollar lower.
Well, only in the context of, so we see that the Japanese yen went down, I don't know, something like $4 or 4 yen per dollar, and then it kind of comes back up. What I'm saying is, are people taking profit there by going yen to dollar to get more dollars for their yen, and then buying assets? Because once we go into the dollar and then they bought in the stock exchange or silver, they wouldn't necessarily see the dollar go down based on that, just in the transfer from the yen to the dollar.
Yeah, the initial sell-off in the dollar, that hit right away at 2200, 10 o'clock p.m. Eastern time last night. That's when we see this big dip in the U.S. dollar compared to the yen. And it was the asset prices. We saw the spike in asset prices several hours later at between 3:30 and 4 a.m. The dollar to the yen didn't really change at that point. So, yeah, it could be, hey, what am I going to do with my dollars? Maybe those trades finally went through. Well, interesting. More DB
you also
warranted.
Europe opening right about then, so there's a couple different things that could have happened.
Yep, that could have been it also. And I have got real quick, I got to send a shout out to my man EC660. Get guys caught a signal out in BFE. Good morning. Someone help me out. What are you saying, EC? Get guys caught a signal
basically out. Saying go for it. I finally get to watch it because I have a signal out here in BFE.
What is BFE?
Bumfucked Egypt.
Oh,
that's like going 50 miles past nowhere.
I got you. My acronyms are a little slow. It's early this morning, folks. I'm about as sharp as wet leather right now. But thank you very much, EC660. And in case you were wondering, you can see right above my melon here. Yep, this one is live. You caught me. You caught it live. And is there one more? There is. My man and Mike is back. He says if January gets too cold and gas won't last, we might be seeing premature peace talks. Maybe the weather can save some lives by being too cold. We'll see. Hey, any reason for peace talks, I'll take it. All right, anything that stops the shooting, that stops people from killing each other. You know, maybe people just realize, hey, shooting at each other is just generally bad to begin with, and we don't need it to get so cold and miserable, and everybody gets broke before we stop. I just throw them out there. You'll forgive me for not holding my breath because the people who make that decision are not going to get cold. They're not. They can afford it. They own the companies that provide the fuel, so they make more money when the fuel prices rise, so it doesn't really affect them. But I admire the sentiment, Mike. I would love to see it. And thank you very much, sir, for the super chat and the support of the channel. Stay warm, brother. I know you're on that side of the pond. Hang in there, man. It's going to be a rough winter. All right, let's talk a little bit more about Japan and what happened last night. So this was the first article that hit. When did this one come out? This was about 9 p.m. last night. All right. This was before that announcement. All these times are Eastern time, U.S. All right. BOJ announces unscheduled bond buying as key yield broke ceiling. All right. So last night, interest rates started to rise in the Japanese government bonds. That was whoever was left owning these Japanese government bonds, because the Bank of Japan owns virtually all of them now. But whoever was left owning them continued to sell. All right, that drives the yields higher. When you sell, you drive bond prices lower and yields higher. Bond prices and yields are inversely correlated. So the BOJ announces, hey, we've got to step in. We have got to print some yen, and we've got to buy these bonds to keep the prices higher and keep the yields lower, because Japan was engaged in yield curve control, the most dovish monetary policy imaginable. So Japan announced this unscheduled bond buying. Global bonds have slumped as traders boost peak U.S. rate bets. Again, this is at 9 o'clock last night. Japan's benchmark yield climbed above the central bank's policy ceiling, and monetary authorities announced an unscheduled bond purchase to rein it back in. The yield on the 10-year note briefly rose 0.5 of a basis point to 0.255%. My God, these rates are so low. You have to keep in mind, folks, the starting point in this whole story. Japan was like drunk on easy monetary policy. I mean, they were so far, I'll say to the left. Maybe that's not the right term. It's not a political thing. It's a monetary thing. But they were so far to the left on the monetary policy curve, it was ridiculous. As the Bank of Japan held the first unscheduled bond buying operation this month, global yields have continued to march higher as traders increase their expectations for peak Federal Reserve policy rates. All right, so yields started to move higher last night, and Japan announced that they were having to print money and buy bonds in order to keep them back down. A few hours later, apparently they threw in the towel. A few hours later, they say BOJ yield pivot rips across global stocks and bonds. This is in the markets wrap. The move by the outlying central bank reverberates around markets. The yen pummels the dollar. 10-year Treasury yield surges towards 3.7%. Treasury yields rose and U.S. equity futures seesawed in choppy trade after a sudden hawkish move from the Bank of Japan sent the yen soaring and raised expectations it would join its peers elsewhere in raising interest rates. Stock futures on the S&P 500 and NASDAQ steadied from big early falls as investors' attention turned to this week's housing and jobs data that could confirm the U.S. economy is losing steam. More on that in a little bit. Potentially allowing the Federal Reserve leeway in its rate rise campaign, European shares also paired some of their early falls lifted by gains in stocks. All right. So that's basically what happened. Japanese government, the Bank of Japan, Hirohito Kuroda, I think I'm saying that right. He's starting to ease off on his wacky, absolutely wacky policy of yield curve control. Also, by the way, I should add that the head of the Japanese central bank, his days are numbered as the head of the central bank. Looks like he's out within a couple of weeks or months. They're trying to settle on his replacement. All right, so we saw that. We've already seen this chart. This is the U.S. dollar against the Japanese yen. The U.S. dollar significantly weakened almost instantaneously against the yen, continued downward a little bit throughout the course of the night. All right, so this, understand, folks, this is going to have a lot of effect on global markets. This is going to send the Dixie lower. All right, now the Dixie, this runaway market, like look at the DXY here. Let me look at a 1-year chart. All right, this is one of the reasons why stocks have gone so low this year. It's because the dollar has gotten so strong, and stocks are valued in dollars. So if the value of the dollar goes up, the nominal value of the stocks, as denominated in dollars, goes down. So this is going to send the Dixie lower. That's going to put upward pressure on stocks. Doesn't mean stocks are going to go higher, because stocks have a whole other host of problems. All right. But you can see here, we have had this major technical breakdown in the DXY. We have broken down below the low from August. We're heading lower. So this is significant. This means a weaker dollar. That's going to put upward pressure on commodities. It's going to put upward pressure on stocks, on bonds, on everything. That's one thing. Now let's talk about yields in the U.S. All right, because what did we have before? With everything that was going on in Japan, you had a lot of Japanese investors, I'm talking private Japanese investors, had dumped their Japanese investments, their Japanese government bonds, because they were yielding nothing. And they came over to the U.S. starving for yield. All right, so they were buying U.S. 10 years instead of Japanese 10 years, or U.S. 2 years instead of JPY 2 years, right? Well, now, again, we're only talking about a quarter of a point, but the direction here, it's a directional shift. Now we could see Japanese investors sending some of their wealth home again. Again, I personally wouldn't do it, but that doesn't mean the Japanese investors won't at least start doing it. So you could see some people dumping U.S. bonds, sending that money back to the yen, and buying Japanese government bonds. Remember the relation between bond prices and bond yields. Dumping U.S. bonds would send those prices lower and those yields higher. And, well, that's what we're seeing this morning. The yield on the U.S. 10-year Treasuries right now up 11 basis points, or 3% to 3.69, almost 3.7. Right? So this is going to send U.S. government bond yields higher.
Hey, Jack.
Well,
I think it's very interesting that now we're looking at when bond prices are moving, we don't really take notice of it until it hits 10 basis points. Used to, even a year ago, we were like 3 or 4 basis points were like a huge move. But now it's, bigger moves are desensitizing us to that level.
That is an excellent point. Much the same way these 1,000-point swings in stocks in a day, right? Speaking in terms of the Dow, like those were unheard of a few years ago. Now we've had like 7 or 8 days this year where we've had almost 1,000-point swings. We've had almost 2,000-point intraday swings a couple of times this year. All right, so this more volatility in yields. And by the way, that is the hallmark of an illiquid market. Big swings like that, big sudden moves. That means markets are less liquid. Keep an eye on that. Note that. And look, this is the yield in the U.S. 10-year Treasury going back about a year and a half. And you can see what Mish is talking about. I mean, look at this move upward the 10-year has had this year. And, I've got this ascending level of support here. This has kind of been our baseline trend. And I draw this on a purpose because I want to show you a couple of things here. I think we may have done this. I did this on my Patreon call. By the way, shout out to my Patreon supporters. Thank you guys for everything you do for the channel. We had this head and shoulders pattern a few months ago. And I remember I did a video that said, hey, we just completed this head and shoulders pattern. This means bonds could be going significantly lower. But we got to this support line here, and we rejected that move. And yields went higher from there, even though we had completed that head and shoulders pattern. A head and shoulders pattern is a very bearish technical indicator. That was suggesting yields could go sharply lower, but they hit this support line and they resumed higher. And I mention that because look what we have here. We got a shoulder, we got a head, and we got another shoulder. We've got another head and shoulders pattern. And then here we are right here. We hit this ascending level of support. And right now, it looks like the move is going to be upward. Higher rates. Even though the Fed has made a somewhat dovish pivot, right? We just got the 50 basis point hike. based on this move, and now based on what the Japanese government or the Bank of Japan is doing, that tells me yields in the U.S. could be going higher if Japanese investors do start dumping their U.S. treasuries and heading back to Japan with their money. That's going to put selling pressure on U.S. bond prices, driving them lower, driving the yields higher. That would mean another rejection of this level. Go ahead, Mish.
Yeah, so I was raising my hand. Hey, so I think it's good to point out here, every time these tops happened, the heads, a crypto company broke. So
that's interesting.
So the next time we go up, which I think we're going to start here, this is kind of the beginning of the pivot, not pivot, sorry, wrong choice of words. This is the beginning of the bounce. It could be, honestly. We had a 10-day, or for yields that we had 10 basis points yesterday. We're going to have 10 basis points today. So we're going to see that start coming up. And when we do, 4.24% is where stuff is breaking right now. So that's the next level to look for.
So when was this previous spike here? Was this back in about May?
Yeah.
Yep. So, and Mish, to your point about crypto firms going belly up, right? It fits with the thesis that cryptocurrency, again, not Bitcoin, crypto, is an extension of the debt market. It is the trashiest, most garbage extension of the debt market. When debt gets more expensive, schemes fail, Ponzi's break down, over leveraged companies break down. And most of these crypto companies are either irresponsibly leveraged, or they're outright schemes, outright frauds. And when money gets more expensive, these things unravel. Right? We saw it with Madoff. He unraveled during the previous tightening cycle back before with the GFC. So this would suggest yields are going higher, folks. I mean, if we zoom in here, let me get rid of that one. Got to undo my draw. I mean, that sure looks like we're heading higher, doesn't it? That looks like a bounce off of that and a big leg up here. Now, I would add one thing that could reverse this. One thing that could mean we fail this level would be a traditional panic in markets, a flight to safety. If we were to get a massive, massive sell-off in stocks, in everything, in other asset classes, and you see investors start to panic, pull their money out of the stocks, and they go hiding in bonds. It's a flight to safety. That would bid up bond prices, and that would send those yields sharply lower. All right, that's a flight to safety. And, I was looking at this chart a couple of times. I was talking this over with Mish last night. I had sent this one over to Brian Zarb at thetechnicalchartist.com. Shout out to Brian. Check out thetechnicalchartist.com. Brian does some fantastic chart work. He is at Brian Zarb on Twitter also. And we were looking at this and we were wondering which way does it break? And that was before this Japan story. And now that this Japan story is hit, it would suggest to me that we break higher. And that's what the trend is showing right now. We're breaking higher. If we were to get, I have theorized that Friday is going to be, let's just say wear a helmet on Friday, is how I put it on Twitter. If we were to see a widespread panic in stocks on Friday, as I believe conditions will be present for, I don't want to say the market will crash Friday. I did a video on this a few days ago. But conditions for a severe downturn in markets will be present on Friday. That could be a trigger for a breakdown in this chart, a traditional flight to safety as investors go to bonds to avoid the bloodbath in stocks. So that's one possible way that this could reverse. By the way, on that Friday subject, yesterday, Jim Cramer did a video that said the Santa Claus rally is not dead. And he said, I S you not, folks. Jim Cramer said Thursday is the time to buy. Yep. So you can add that to my list of reasons why I think Friday conditions for an outright panic in the stock market will be present. I did this video. We've got worry over the Fed over tightening. We have got a technical breakdown in the S&P 500. What else do we have? We've got potential for tax loss selling, and we have got a period of very low liquidity ahead of the Christmas holiday. A lot of people are not going to be trading on Friday because people are traveling. People are doing holiday stuff. And now you've got Jim Cramer says a Santa Claus rally. And he says the ideal time to buy is Thursday. So you can add that to my list of reasons why I think Friday. Not saying it will happen, but conditions for something very big happening will be present on Friday. Whether that spark ignites the whole mess or not remains to be seen. But when I saw Jim Cramer say Thursday was the time to buy, I was laughing so loud. Gigi was yelling across the house, "Poppy, is everything okay in there? What's going on?"
So I
Oh
actually,
boy.
someone made me think about something. Last night it was reported that Kathy Woods bought 27,494 Tesla stock, and
Ooh.
someone said that Kramer's basically the male version of Kathy Wood.
Yeah, I can see that. I can see him. By the way, Kathy Wood said in a TikTok video that what these market disruptor technologies she's talking that they're going to 30x. Give me a break. I
Hmm.
mean, what is she down year to date? 95% in her fund. And now she's buying Tesla
Yeah,
stock.
there,
I mean, look,
I was gonna say every bull market has a seller and someone that really gets hit hard. And this time, I think it is going to be Kathy Woods. I would also like to say thank you, Ramana. I can't do it. Yeah, he's the one that came up with that comment.
okay. That was a pretty good comment that Jim is what's the male equivalent of Kathy? Is it Christian? Catherine?
Yeah, I could go with
I don't know.
that.
Dog? I don't know. He's Dogwood, we'll call him. Dogwood. There you go. Not Catwood. He's Dogwood. That's what we're going to call Jim from now on. Yeah, Dogwood says Thursday's the time to buy. Look, the whole thing with Tesla, like I get being contrarian. The way you do well is by seeing what the crowd doesn't see. If the crowd is dumping and you see some value there, that's a time to buy. You go against the crowd, right? If you just go with the crowd, you're not going to trade well. All right. Just doing what the crowd does, you're going to be late to every trade. You're going to lose money. However, there is a point where being contrarian is like the equivalent of dyeing your hair pink to spite your parents. Like you're just being contrarian for the sake of being contrarian. You're not actually making any statement about yourself. You're not actually doing anything other than saying the opposite of what the masses are saying so you sound cool. Right? So like buying Tesla right now, what is the upside for Tesla? What? You think people are going to be buying 75, $80,000 electric cars that you can't even charge in 90% of the country because California passed a law? No, people are leaving California. They're not buying Teslas. They're leaving California. So and Tesla's already valued as if every car on the road is a Tesla. So no, don't. I'm not buying Tesla right now. I've never owned Tesla. I've been wrong about Tesla for 10 years. Until now, I'm finally right about Tesla. I've been saying I wouldn't buy Tesla with my worst enemy's money for a long time. Tesla like 20x while I was saying that. So I'll take that with a grain of salt, I guess. But I'm more of a value guy. I'm more of a value guy than a growth guy. So these are more my market conditions, what we see going on.
Well, I think you don't. She's trying to catch the bottom, right, of the Tesla market, and you're right. Right. Even Elon's selling right now, and because just a couple weeks ago he sold like 3 billion. And let's just let's say that he does end up selling or giving Twitter away or whatever, right? All those loans are still attached to him. So
Talk about
yeah,
Elon for a second.
Tesla's under selling pressure.
What was Tesla but the cult of Elon Musk, right? That's what Tesla stock was. Yeah, people like the cars and they like the solar thing, but it was a cult. Everything Elon Musk touches turns to gold. And Elon was even flaunting that with his flamethrower. Remember when he did his flamethrower and it sold out in a day? That was Elon Musk mocking his supporters. Like, I can sell literally everything. Spaceballs the flamethrower. The kids love it, right? Like the merchandising. Remember yogurt and Spaceballs? Right? That was Elon Musk essentially mocking his fan base, and it worked. He sold his flamethrowers, every single one of them. But now Elon bought Twitter, and he's letting people speak their mind on Twitter. Everybody except Keith Olbermann, hilarious, by the way. And now Elon Musk is basically persona non grata for half the country. He's not the savior anymore. And I used to say one of my big problems with Tesla stock was if Elon Musk got hit by a car tomorrow, that stock would crash 90% because it was just a cult of Elon Musk. And without him, you're left with a company that doesn't make very much money or very many cars. And right now, this cult of personality around Elon is being deflated because he took an unpopular opinion. Let's let the right speak their mind. And now he's exposing government collusion and what the FBI did in interfering with the election. I mean, right? Like the whole overseas interference in U.S. elections was this massive story. Oh my God, I'm going to get myself shadow banned. But it turned out we were the ones interfering with our elections, not they. It was our government that was interfering with the elections. And Elon Musk is shining a light on that right now. That's not very popular with people. And so people who bought his stock because everything he touches turned to gold are dumping his stock now. It's just something to consider. It's one of the reasons why I never touched Tesla was it because Elon was as we say in nuclear, he was a single point vulnerability. One single thing that could go wrong that could bring the whole thing down. You never want to get involved in anything with a single point vulnerability. Is it the same in the Navy? Do you talk about SPVs in Navy nukes?
Yeah, we call them a little different. We call them single point failures. And,
okay.
We did all our best in our risk meetings to get rid of single point failures, or at least identify them so that we can keep an eye on them.
Yep. If you've got that one wire, that one component, that all of your safety systems, the primary, the backup for the backup, the backup for the backup for the backup, if they all go through a same single wire, then that one wire is a single point vulnerability and could take out all of your backups all at once, right? And Elon Musk was a single point vulnerability for Tesla stock. If anything with Elon went wrong, that stock was toast. And right now, Elon is falling out of favor with his cult following, and Tesla stock is toast. So that's why I wouldn't touch that one. So, all right, we got a little sidetracked on the Tesla thing. I hear the cars are awesome. I've never ridden in one or driven one, but I hear they're pretty awesome. All right, guys, the markets are open. It's almost 10 o'clock. Let's see what the markets are doing right now. The S&P is down 8 points, essentially flat for the day, 0.2%. The Dow is down 64 points, or 0.2%, again, essentially flat. And the NASDAQ leading the way lower, although only a little bit, down 31 points, or 1/3%. I would add all of these stocks are moving higher since the bell, although still down for the day, but they are currently in a green candle heading upward. So we'll keep an eye on that one. Commodities looking great. Silver is now up over $1. You shiny, beautiful metal, you. Look at that, up 4.46%. Congratulations to my stackers who are perhaps finally being rewarded for their patience. We'll see. I'd love to see that one. So big story today. It was the Bank of Japan that they have hiked rates. Again, my take on it, my initial take, this is a qualitatively significant move. The most dovish central bank in the world has just shifted hawkish. So that is significant. It could start a flow of money back to Japan. But the engineer in me, the numbers side, quantitatively, I look at this for what it is, a 25 basis point hike from almost nothing to almost nothing. Quantitatively insignificant move. We'll see which one. Is it the psychological thing that wins out over the numbers and the rationale? I couldn't tell you, but that is my take on it. Mish, you got anything you want to add before we wrap it up?
No, everybody keep an eye on the 10-year. I think we're going to start seeing some, as it comes up, we'll start seeing vulnerabilities again. So it's just keep an eye on it early.
Yeah, and I just messed up my chart, so I was gonna show the 10-year. Here we go. The 10-year is right now up 11.6 basis points. So yields moving higher today. All right, guys. Thank you very much for your super chats. I don't think I missed anybody. I appreciate your generosity. Thank you to my Patreon supporters for everything you guys do for the channel. There is a link down below should you feel so inclined. Looking forward to talking to you guys tomorrow on our Zoom call. I'll be posting the link for that later today. And thank you, Mom and Dad. Thank you to my Blue Wrenches for everything you guys do, keeping things neat and tidy in the chats. And until next time, live small and dream big.